Good morning, ladies and gentlemen, everybody, boys and girls. Welcome back. So yeah, I figured I'd hop on for a little bit today. And we'll cover the market as we normally do. Pretty much run through everything that's happened for the past couple days. I know I wasn't online on this day. Maybe I was online this day. Yeah, I think it was on. Yeah. So we'll cover the market pretty much for these past 2 days. Right now we're just pretty much doing an oversold bounce. So, market's pretty oversold over the past couple days. So the fact that we're bouncing right now, I mean, really no surprise. It's kind of what we were looking for a little bit ago. Early in the morning, we were pretty much mainly bearish, then back to bounce long. But yeah, we'll cover everything, go over it today. I think it's a pretty straightforward day. Past couple days have been pretty straightforward, honestly. It seems like most days are pretty straightforward. But anyways, we'll get into all of it. And yeah, dude, Santa dumped his load of gifts on everyone. I mean, Santa pumped us up and then he dumped us, dude. So, and that's okay. I mean, it just kind of is what it is. That's how the market generally operates. It goes from, up to down. So Santa pumped us and then he dumped his load of gifts on us, unfortunately. So here we are having to clean up the mess, if you know what I mean. So we're going to get into it and have some fun. That's pretty much it. So let's pretty much delete all this jazz off the chart. And we'll go back to the volatility index. And the reason I'm taking us here is because this is really, I would say, one of the more important factors that led to Santa dumping his gifts on us. So we're going to go here, and we're going to go here. So, what was it, Friday? Yeah. Right? Yeah, because Friday I didn't stream. Okay, yeah, so it was Friday. So on Friday, I didn't stream to YouTube, but, in our private group, which probably most of you already are in, honestly. But anyways, yeah, so we pretty much just had a breakout on the volatility index. So on Friday in our private Zoom stream, pretty much mentioned to be long the volatility index over $15.48. We're going to look to run the volatility index from 1540s or so up to about $17.30. As a result, we should be able to pull the markets back, so on and so forth. So let's first cover the VIX, and then that will take us into the market, and then so on and so forth. All right. So this is a regular trading hours chart, 15-minute. There's your 50 SMA. So you can see on the 15-minute time scale, we started an uptrend, right? And that was on Friday, early pre-market. I'm going to go into a pre-market chart here. And we're going to zoom in. So this was, and I'll change this to a 5-minute real quick. So this was the chart / 15-minute breakout on Friday. So right there. I mean, I'm not gonna make a bunch of drawings, but you guys see it. That yellow line, that's the 15-minute uptrend start for the volatility index. So it's pretty much, if you're over, you're looking bullish. If you're under, it hasn't quite triggered yet. So on and so forth. So we break out into a 15-minute uptrend Friday morning at 7:20 a.m. on the volatility index. So at this point, I'm pretty much looking for, or not 7:20, my time scale's off for whatever reason, and I'm a dummy and don't know how to reset it, nor have I really tried that hard. So I was actually 8:20 a.m. Sorry. So 8:20 a.m. Eastern time on the volatility index, we enter an uptrend. When we do a successful 15-minute uptrend move, a lot of times we're going to be backtesting the 30-minute trend at that point. So we know that on Friday, 8:20 a.m., volatility index enters a 15-minute uptrend. A lot of times we can increase volatility like that, or that's when we'll increase volatility. As a result, markets will drop, so on and so forth. And we know that a lot of times we'll transition to the 30-minute scale at that point. So now we're going to go into the 30-minute chart. All right, so once we get into the 30-minute chart, you will see that the 50 SMA for the 30-minute scale was priced anywhere from like 1730 to 1720. So we'll just kind of do it like that. Now we'll go back into the extended trading hours chart. All right, and the reason I'm just going to extended trading hours charts is just because most people look at it that way and they're more familiarized with it, so that's why I'm doing it. So we're going and looking in now the extended trading hours chart. So what we have here, again, is the 15-minute, which I'll just type this out, 15-minute uptrend start / breakout. All right. So, and I'll change that to a little bit bigger so you guys can see it. 1 second. Boom. All right, so here's your 15-minute start, uptrend, breakout, etc. When we break out that, a lot of times we're going to transition to the 30-minute. So we'll go up here, drawing tools, All right, so now we're going to transition to the 30-minute trend / uptrend start. All right. So that's pretty much that. So on Friday, we wake up, 8:20, 15-minute trend, starting an uptrend. A lot of times we transition to the 30-minute. As a result, what are we going to do? We're going to look to break the market out from 1550 to 1740. If the volatility index breaks up from 1550 and goes to 1730s, whatever, 1720s, the market's probably going to go down. All right, cool. So what we did is we ultimately used the uptrend start for volatility Friday to start pulling the markets down. So let's add a little bit more onto the storyline here. All right. So in Friday, whether you look at a regular trading hours chart or not, it doesn't matter, whatever, right? But here, Friday, right there, you will see that the market does what? It gets below its pre-market 30-minute 50 SMA. I use both pre-market SMAs. I use regular trading hours. Most of the stuff is derived around regular trading hours, but they all have a purpose and they all tell a story. And the better you're at following the storyline, the more you can kind of create these narratives for yourself kind of for a day, if that makes sense. So what we see is we have a downtrend start on the 30-minute for the market on Friday. So since it's below the SMA, it is pop to short unless it's back over as it relates to the pre-market scale. So let's think about this for a second, right? So on Friday at 4 in the morning, so market opens, we're trading, futures are open, whatever. The S&P 500 is now below its 50 SMA on the pre-market chart. So that's a bearish signal potentially, all right? Then at 7 or 8:20 in the morning, you can see it never recovers, and now the volatility index goes into an uptrend. So think about it. 4 a.m., the futures get sold down. This creates a breakdown in the market, so much so that it turns the 30-minute trend on the S&P 500 pre-market chart to bearish. So that's a bearish signal. That bearish signal never went positive. As a result, the volatility index goes positive over its 15-minute trend. That can create an uptrend start. So you see how the timeline and the story evolves. First, the market goes down and goes bearish. That first gets the volatility index to go up. The market never recovers. Volatility index stays high enough to then start to break out the 15-minute. So we basically use a 30-minute breakdown to boost volatility. Then we boosted volatility more once we knew that it started to break out the 15-minute trend. If we break out the 15-minute trend on the VIX, we like to go to the 30-minute. If we make that move, the market's going to sell off. All right? So ideally, it starts with the market going down to boost volatility to a level that creates a new uptrend breakout on volatility. That new volatility then furthers the progression of the sell move, which really all just hindsight 2020 is just, oh, the market went below the 30-minute, so it's bearish and down. No, the market evolved to create such a move. Market had to be bearish, volatility had to go up, volatility had to continue, and it had to evolve, right? Or else you just wouldn't have had that drain out like that. So we first start with a breakdown on the pre-market 30-minute. Also, When the pre-market 30-minute breaks down, we like to transition to the regular trading hours 30-minute. So again, this is all strategy and lots of rules for you guys, but it's really just kind of how you can, get a hang for how the story develops throughout the day and how it's been developing. And by the way, we're going through an oversold bounce right now. If you're shorting the low of the market today, it was a terrible idea. And we'll get into why that was the case. So just know that we break down the 30-minute. That's what boosts up the volatility, okay? And obviously, like we said, we had targets on 17. So now let's get into a regular trading hours chart for the SPY. So now we're going to go into a regular trading hours chart. So what do we have? We have a gap down. So, whoa, what just happened? I don't know what just happened. Maybe I was on SPY there. Oh, that's what it was. I was on SPY. Anyways, so we'll look at both SPY or SPX. All right, so on Friday, we also open with a gap down. So what happens there? We open with a gap down. So we're going to run gap down strategy, right? So gap down strategy basically says that if we have a gap down, you fib down. If you have a gap up, you get fib up. And you're going to look for continuation in that direction. It's going to work about 70% of the time. 80 might be pushing it these days, but anywhere from 70, sometimes it feels like 80%, but about 70% of the time we're going to go in the direction of a gap. There's times where it won't work. You have to know when it's not going to work and why it may not work and yada, 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 because someone could use it, like, you said it was going to go in the direction of the gap, and then it doesn't. And it's like, I know, but again, it doesn't work every time, and there's situations that are going to trump that strategy, and it's obviously up to the person watching the market to, create those biases for themselves, and that could be challenged. So I'm not saying it's perfect. So on Friday, right, we have a gap down. So we're going to run gap down strategies, right? So that's how on Friday, number one, we had suggested, at least in the private group, I know it wasn't on YouTube, but we suggested you should watch for the VIX to go to, or the SPX to go down to 5,986. And you should watch for the SPY to go down to a price of at least 595. So on Friday morning, once the market opened, our targets for the market downside were $595.16. That's actually off by a little bit. And then whatever the price was there on SPX, it was 5,986. All right. And again, we can't derive those targets until the market opens because the strategy is based off of market closes and market opens. So all of those gap down, those targets, again, that happens literally at the open, right? So we don't come up with those. We can get an idea of where it's going to be, but it's not set in stone until obviously market open. All right. So it's like that strategy can only be deployed if the market has a gap. So the market could be gapping to start a day, but then by the market open, it closes the gap, and then that doesn't apply to that day, right? So it's like it's a kind of sometimes an ever evolving storyline at times. All right. So we open up with the gap down on Friday. So now let's kind of go through the storyline again. Market opens. It breaks down the 30-minute pre-market chart. That's bearish. VIX goes up. VIX goes up so much that it breaks out its 15-minute trend, and that usually starts to kickstart volatility. And then we usually take the market to the 30-minute, which is priced at $17.20. So that's up, $2 a share on the VIX. Well, if we blow the market up $2 a share on the VIX, what is the market going to do? It's probably going to go down. So now start to think about it. The market's opening with the gap down now. Oh, so that means we have gap down targets. And we also have 30-minute upsided targets, a couple dollars away on the VIX. So now you can start to see how if the VIX needs to go to 1720, the market opens with the gap down. This could be a day where, the gap down strategy will work because we have both targets on the upside for VIX. Volatility is breaking out. It's uptrending. We have a gap down. That means we have gap down targets, so on and so forth. As opposed to, let's give it a different approach, as opposed to markets opening with the gap down, but the VIX already broke out from the 15-minute and went to the 30-minute. There's no more room left for it to go to the 30-minute. That could be a day where instead of the market gapping and going, we actually use the 30-minute VIX as resistance and we bounce the market. So that would be a day where maybe I wouldn't, or we wouldn't look for that to occur. Or the story would have to be the market now has to break out the 30-minute for the gap and go to work. So different situations can apply. So ultimately, you had market breakdown, VIX goes up, VIX breaks out, helps us further send the market down to what we would say are gap down targets for the day. All right. as a result of the market gapping down and continuing down and volatility going up, what did we do? That allowed us to break down the regular trading hours 30-minute trend on both the SPY, SPX, so on and so forth. So though the market went further than our gap down targets, that's fine, totally fine. We wanted to first, it's like you're not going to look for the market just to get destroyed, because why? Because you're still over the 30-minute positive trend. So you'd have to break that down to then start a new downtrend on the market. All right. So midday, mid-morning, the market also breaks down the 50 SMA on both the QQQ and the SPY. And then that kind of allows a new catalyst, right? To help break the market down further. All right. So now we'll go into like QQQ and we'll go into SPY and we'll look at their 1 minute markets. All right. And then we'll redo the whole storyline again. All right. So this is where the market broke down on QQQ Friday morning, right here, right where that green line's at, right there. That's where the market breaks down. All right. So this was, I'll just put down breakdown right there. Yeah, that's fine. I could say bearish, but you guys know. So that's the breakdown for QQQ. So a lot of the sell-off, I mean, everything sold off on last Friday, but the sell-off was really, how do I say this? The sell-off, a lot of the sell-off kind of kick-started at least where the breakdown happened. Sorry, the breakdown spot really was kind of kick-started by the NASDAQ. So a lot of the reason we kind of sold off midday, and I think it kind of really sped up, was really built off the back of the Qs. And then obviously SPY followed. But anyways, so now we'll move into the SPX chart here, 30-minute. All right, and go back to Friday. All right, so now we're going to look at the SPY chart. This guy right here, we'll go to a 5-minute, 1 minute, so on and so forth. Pop this bad boy to a pre-market. Don't know why it's not. I know why it's not, but anyways. Back here. Yeah. All right, so this is where the SPY broke down. So this is the breakdown on the SPY. Let me get the text out. Breakdown level. Which basically means if you're below the breakdown level, the market has entered a bearish territory where that's it. It's just bearish until it's not, kind of jam. So that's the breakdown, right? So do you notice anything? So you see how, again, the market at 10 o'clock on Friday, SPY breaks down. So it's now a bearish market, literally a bear market in the macro, short term, right? Bear market, pop, fail. Bounce, look at bounce all the way up. Huge bounce. You thought you thought Santa was pumping you again. And then guess what? It just comes into what? The breakdown. So it literally just breaks down, back tests, and slam. All right. That's all. All right. And if you look at the QQQ, right? So what's the QQQ? QQQ just breaks down, back tests, down, and down. So you've had and you could go look it up. ChatGPT is great for this, but if you look at the SPY, if you look at the NASDAQ, I mean, since the breakdown spot, the markets could easily have lost. Depending on which one you're looking at, but it could be, it could be 10 bill, right? This might be a $10 billion, $20 billion decrease in market cap on the QQQ or SPY, right? So simply from one line on the chart, the markets may have washed 20 billion in market cap, depending on, which one you're looking at or so, right? So let's go to the storyline again. 4 a.m. Friday, market opens up. It goes down below a pre-market level that starts a downtrend. So the pre-market starts downtrending at 4 a.m. Friday. That pre-market downtrend allows for the VIX to start uptrending. We then use the breakout on the VIX to further the price down using gap down strategies. If you look at the gap down strategy for the market on Friday, all right, you will notice that the gap down strategy target, the 161, does what? If we successfully go to that, it puts you right at the 50 SMA. So now the market gets to decide right at the first gap down target, does it want to stay positive or negative on its trend for the day? And it went negative, right? So Again, market starts a pre-market downtrend, which then starts an uptrend on the volatility index. We use the breakout on the volatility index to then further run the market down for the day with a gap down, giving us a 161 target that then lines up with the downtrend start on the SPY/QQQ/SPX. The market decided it did not want to hold its 50 SMA trend. Therefore, the market then continues into a bearish territory. So at about 10 a.m. regular trading hours on Friday or so, markets go into a downtrend. That's why Santa Claus dumped his load on you guys for the past 2 days, because since 10 a.m. on Friday, we entered a bear market. All right. So then we lead into today. All right. So what do? We have the SPX. So what are we going to do? We have a gap down, market's bearish. We're going to run what? We're going to run the gap down strategy. And we're going to look to take the market down to where the 161 target is at. All right. So today, when we pretty much came into the market this morning with our private group, what was the recommendation? Recommendation is we're probably going to be looking bearish for the moment, down to as far as 161. Today was even a day where I said, also, there's a good chance today we don't even get the 161. It kind of shies and starts to bounce. Why? Because it's less easy to go down, down, down days in a row. Like, you don't typically just gap down, go, gap down, go, gap down, go. Eventually, it's going to bounce, and that's going to fail, all right? So knowing when to kind of trump things, that's what we were talking about earlier. So today was a day where we kind of built the idea that we may not actually get the 161. Again, we pretty much did. I mean, it missed by a couple dollars there. So, when we're sitting in pre-market, the market hasn't even opened, and we're looking for 161, and it pretty much gets 90% of that drop, all right? And now the reason that we said today's a day where you probably are going to expect a shy of the target is because as we started to near the target for the day on the downside, we looked at the underlying market internals. So we're looking at the internals, the guts, right? The the characteristics of the market, the personality for the day. And so as the markets are going down, the SPY's dropping, SPX is dropping, we're going for that 161 target, what ends up really happening? We can see that, for one, the NASDAQ market isn't even performing. It's just basically sideways and flat. Look at all these hash marks. So as the market's dropping, most of the issues aren't actually declining across the NASDAQ 100. You can see they're just flat. So they're just trading doji, right? They're trading straight sideways as a collective group of equities, NASDAQ 100. So it's like, all right, well, yeah, we might be thinking that the SPX could go down and all these things, but you're looking at the NASDAQ 100. I mean, none of those issues are really declining. So it's like, should the market be going down aggressively? That would say no, right? So if you're seeing the markets go down, but the underlying equities are just going sideways, it's like, maybe the shorts are going to get squeezed off the low, right? People chasing short when the underlying personality and characteristics of the market aren't saying to do that, actually, right? So then we go into, we'll look at the FANG. So the FANG, they really run the market. So we look at the FANG. So the FANG they're going down. They're actually going down in the morning. So that would make sense that we can run the SPX target downside, because at least the major market cap stocks are doing it, right? So though the other ones are kind of flat, we look at the FANG, and the FANG are going down, right? So it's like there's enough people. When I say people, it's like there's enough stocks that are big enough that could arguably make the move still happen, right? If these weren't going down at all, the market probably wouldn't have at least done that first drop, right? Because there wasn't enough oomph there, all right? Now, let's go look at NYSE. So we're going to look at the issues listed on the NYSE here. So from the open, what happens? Those were going down. So it's like, all right, so the NYSE issues are going down, some FANG are going down, most of the NASDAQ 100 is just kind of staying flat. So it's like we do have some stuff performing down. So it's like, okay, the down target's still valid, which is that SPX target, all right, 161. Here's the entire NASDAQ issues, right, for the day. Those were all going down, right? So it's like I look at all these different ones that kind of gather an idea. So, entire advancing, declining issues of the NASDAQ, those are going down, all right? Now, when we get into the SPY, these are the SPY issues. The SPY issues, I think we're going up, down to flat, sorry. So we look at the SPY issues, right? So we're trying to run the SPX down to a 161 target. We look at the market. You have a couple down candles on the SPX issues, but then guess what? It's mainly flat, right? So essentially, we have, again, the market's macro bearish. We have a gap down, so we're trying to go gap and go with it. The market opens up. There's enough downsided strength across most advancing, declining issues and markets that we would look at that it still is kind of valid, all right? But let's now bring up the SPX. So let's get into like a 5-minute here, or maybe a 1 minute would be better for this just because. All right, so this right here, we'll put a little bullseye on it. So this was our downside target for the day right there. So as we're getting down to that target, all right, what do we notice? As we get down to the target, the SPY issues are flat. All right, so as we're nearing it, the SPY issues stop going down. They just kind of flatten out, all right? As we get down closer to those targets, right, we're almost to that gap down target. What happens to the advancing declining issues on the NASDAQ issues? They flatten out. So, okay, they're not driving the markets down. All right. Then we go and look at the NASDAQ 100 here. All right. What's going on here? Let me put this full screen so I can get it into focus. These are just flat, right? We look at the FANG. As we're nearing that target, the FANG are starting to kind of go up. You even have some divergence, if you will, or momentum, whatever, right? So those are just flattening out. And then you go look at, again, your issues across the NYSE, which have been, I don't know why TOS is being lame here, just not enlarging this. There we go. You can see as the NYSE gets there, they're kind of flattening out. So as we near the desired gap down target, the underlying market personality and strength did not confirm it, right? It's not saying, yes, we're all still going down. It's actually saying the opposite. It's like, yeah, even though you want to go here, and even though we pretty much have gone there, nothing in the market is helping you get the rest of the way, right? You've gotten close, and then everything's kind of like, I'm gassed. I'm too tired for this. Not going to happen, right? And that's totally okay, right? But it wouldn't be totally okay if you're just slamming the low and shorting the low and like, yeah, we're going to get the target. We want to get the target, and being arguably stubborn with yourself when everything else is saying it's going to be hard to do. Now, could have the market internals went from flat back to red and gotten it? Yes. Hindsight 2020 is always so perfect. But in the real time, and you're looking at it like, well, we pretty much have gotten like 80% of the target down, 90% of the target down. And we're close, and the market internals are all kind of slowing down. At that point, it's like you got to kind of, and then you think, well, we're kind of on 2 days of gap downs already. The market's already down however many percent of the past couple days. Things don't always go in a straight line, so you kind of could get the vibe, right? So that's why we pretty much recommended to be bearish to start the day, because again, we are in a macro bear market, in all of these things, and we do have a gap down. And when the market opened, the market internals were for the most part moving down. There were some flat ones, but they were moving down, so we're going to stay in that direction until we shouldn't. And sure enough, as you get close to that target, things kind of flattened out, and then the market bounces, all right? And then for the market bounce, we had a target. There, you can make up all sorts of targets, right? You could be looking at an SMA, but I'm just saying the things that I would be looking at, right? So now we go into the market, and once the market started to, not initially, right away, because we're always looking at all sorts of stuff. I mean, we were, at the time the market started to bounce, we were actually telling everybody, look for the downside targets on Bitcoin. So, like, these were all the downside targets for Bitcoin that I've had over the past couple days, right? So, boom, boom, boom. And the reason there's so many is because just the way the Bitcoin market is set up right now of what's previously happened in the past, it's just one of those times where it's not, like, so straightforward that I would just pick 1 or 2 levels. There were so many areas of interest that I kind of just had to create a lot of them, and you're just basically working off a zone then. So right now, these are kind of the 2 zones on Bitcoin, but we'll get to that in a second here. So back over to SPX or SPY or whatever it was. Yeah, SPX. So going into the SPY, right? So this was once the market starts to bounce, this is pretty much our target here. What was it? Yeah, right here. So once the market started to bounce, that was pretty much our target right there. And I'll put a little bullseye. So, and this one's kind of tricky to explain. It's not really tricky to explain, but also this level right here, this is where we start to you can start squeezing out the 30-minute chart. So we'll basically say everyone that's been bearish, at least the 30-minute scale on this market, that's where they start to squeeze themselves out, right? So that's also why it becomes a target for us, is because the 30-minute chart, if wanted to, could still stay bearish below here and kind of do one of those. So that's why we always look for that to be a back test target first. Then actually a lot of times we'll look for some resistance. Or wait, that was wrong. Totally inaccurate. I'm sorry. I made a mistake. Totally wrong. My bad, guys. It's not wrong. I just had the level wrong. Sorry. It's right here. Sorry, I picked the wrong top. I was going too fast. It's right there. My apologies. This right there is a 30-minute target, and we'll get into that in a second more. Where's my bullseye? So this was supposed to be, yeah, that's our 30-minute target. So once the market starts to bounce and backtest, a lot of times that will be our first go-to target, right? Hence why we kind of got close and then we had this really big pullback. It's because it's 30-minute resistance based off the pre-market, all right? Once we get through this, a lot of times you're squeezing out the pre-market move. So everyone that's been bearish today, from this high down here, down, all of the volume accumulated, they're pretty much all underwater now, right? So unless you shorted all the way up here, and you've held the entire move, you're probably red, right? Because think about it, most people don't start, get up in the morning, 8, 9, whatever. So we'll just think about 8, 9 in the morning, 7. So 7, 8, 9. Most people are trading from like here and down, right? And most people didn't short this and hold this whole move. They may have re-entered. So just in general, we would say above the bullseye is where the market from pre-market will start to squeeze themselves out, kind of thing, right? So what we have is we have a market that goes down, becomes oversold, bounce back to bullseye, which is the volume shelf that we look at on the 30-minute. Once over that, now the pre-market sellers are starting to get taken out a little bit more, all right? So, yeah, it's a whole big game. And so when we look at the pre-market system, I'll show you real quick. And, whether I show you this stuff and it stops working as much, again, we'll see. But, again, we have so many systems that I don't really think you're going to be able to. Well, that's not entirely true. Things come and go, but if I show you some stuff and it stops working, that's fine. I mean, there's so many different systems and approaches that we can use that it's okay. Something comes and go. But naturally, the more you show something, or the more popular it's not the more you show something, it's the more popular something becomes, the less it works. That's why, again, most of the popular, realistically, so most of the popular YouTube videos and strategies arguably are going to be the worst ones to use, at least as they become more popular, because the more people use it, the less it's going to work. So generally speaking, any of the viral videos regarding stock market information they may have been valid at one point, but again, as they become more popular, it's theoretically worse to use. So again, you kind of have to be careful when looking at popular videos. Even my old stuff, I would probably just disregard all my old shit on YouTube, especially the ones that were most popular, to be honest. So anyways, so here it is, right? So you see, what we do is we track the volume of the pre-market. So let's just, for a second, we're going to say this market here, the pre-market, from start of pre-market to the open, we're looking at the 30-minute. We know that the 30-minute chart, volume weighted average price, the way we run it is right here, right? So that yellow line, that green line. So we took the pre-market of its entirety from the open, or from open till open, when it opened, or open to close pre-market, and we track the volume, and we say to ourselves, that's the volume trend of the 30-minute, which we find very valid and important, and we just get the main level and say, when the market is ready to bounce the 30-minute, we'll generally come back to here. Then this is where the pre-market bearish chart has the opportunity to keep things bearish, and if they don't, we generally start to squeeze them a little bit. All right. So it's just one part of strategy. So we, again, just take the pre-market, extrapolate that trend, run it into the live trading hours. And so we would come up, in that case, with a price point here. And the reason I'm highlighting this is so we can go look at like a 1 minute. So that would pretty much tell us that this 30-minute trend is somewhere around, like there to there, arguably. And so we go into here, go back to a 5 minute or a 1 minute. And so that is why this would become our bullseye for our counter trend 30-minute long press. And now in between the move up there's a bunch of 1 minute and 5 minute stuff that we're doing too, but ultimately that's that. We have taken the start of the pre-market and everybody that was participating and then figured out where their 30-minute volume shelf was going to be, and once we bounce the market, we generally are going to go back to there. Sometimes they happen like right into market open, sometimes a few minutes into market open, sometimes they're later in the morning, later, something like that. All sorts of stuff. Also, the SPY is coming into some short-term, levels. Like right now, we're coming into that's 10, 590, 17. 590, 17 is 10 SMA level over under. So probably a little bit of short-term resistance in this area. Just some SMA stuff. It might not be big, might be big. It could be huge. I don't know. But anyways, so that's that. I haven't even read any questions. I've been just kind of on a roll this morning. Sorry. Yeah, so like ready, like I'll pull this screen over. It's nothing super special, right? Look at where we're at. You see that? See the bounce? See how we've gotten all the way back to about the 10 SMA? So the same way that you guys would look at like a 9 SMA or a 10 SMA in your 1 minute and 5 minute and things like that. You're like, oh, it's the market broke up, and then this is like the first attempt of it. There might be a little dip. We'll loop the 5 minute, loop the 10 minute SMA. That's the same thing on the 30 minute, and that's just what that is, right? So the market effectively has, and my SMA here is not it's the right color, but anyways, it's just different. So again, we had the breakdown the other day, and it's like, this is the 10 SMA. So a lot of times you can get some static movement around it. It's not that it's going to be like your be-all, end-all trade system. It's just a little piece of the puzzle, and I thought I would mention it there. So, but yeah, so the way I see it, right now is the market's just oversold and bouncing, and I probably need to actually run some 30-minute strategy stuff here real quick. So give me a second. Zumba. Why is that purple too? I don't remember making it purple. Might have accidentally did that. So anyways, cheers. Thanks for tuning in. So yeah, really just to recap, guys, the market is it's a bearish macro environment, and that started about 10 o'clock Friday, and we really made that bearish move off the back of the pre-market system on the SPY and the SPX and the volatility index. So we kind of used the SPY pre-market, then the volatility index to basically make the bearish market over the past 2 days. And then this bounce is just, there's not enough strength in the market to keep selling that move lower in that time there, and so on and so forth. And actually, something else, this is something you should be watching right now. And this is actually, so this would be actually more of like, this is where your eyes should be focused on for a potential play, maybe the next day or so. And it might not be perfect, but, when it happens, it's going to happen, and, But anyways, so we have the 50 SMA here on the 30-minute VIX chart, which basically says, if the market's above on the VIX, it's bullish, right? So think about that. On Friday, the VIX gets bullish over the 30-minute, then the market goes down over the past couple days, and where's the VIX? It's over, right? So VIX uptrend, market down. So in the next day or so, couple days, if we get the VIX to break down the volatility index, if we get the VIX to break down the volatility index, we would arguably, be attempting to send the VIX into a downtrend. As a result, what would happen to the market? Market can pop. All right. So the same way we use the volatility index to pull back the market on Friday is arguably it's always the same thing. It's kind of a rinse and repeat system. So the other day on Friday morning, right, we saw, the VIX is breaking up, so we can use the VIX to pull the market down, even though the market isn't in a bear market yet. Same thing here. The market is in a bear market, and yes, it's oversold, and yes, it's not in a bull market over the 50 SMA. But if the VIX breaks down, that could be the catalyst to us say, hey, further the bounce. Even though it's macro bearish, we could be reversing the macro bearish trend off the VIX. So it's kind of the concept of like people say like moving averages are too slow, which yeah, like sometimes they are. Like if you look at the 50 SMA here on the market, it's all the way up at 596. The price of the market right now is 589. The uptrend start level on the SPY is 596. So we're about, what is that, like $8 away or so, give or take. So we're $8 away from an uptrend start on the market. So if you wait for the market to go all the way to the uptrend start level before being long, then you miss $8 per share in possible gains just to where it could go into an uptrend. But if you look at the VIX on my chart, look at the VIX. The VIX is only, 20 cents away from a potential downtrend start. So we're $8 away from an uptrend start on the SPY, but we're only about 20 cents away from the potential downtrend start on the VIX. So we would use the VIX downtrend to then long what is the market, even though it's in a bear market. So we're just using the VIX to kind of further the market higher in the next couple days with a breakdown. All right. So I hope that's all clear. I hope that makes sense. I know there's a lot to it. I know I'm saying a lot, and but that's it. So right. So if over the next couple days, watch the VIX, and it's this is all it is. It's just, again, it's as long as the VIX stays over, that doesn't apply. Right? If the VIX breaks down and goes into a bear market like this, the market's gonna go up generally. Almost like 80%, 90% of the time, right? So right now we're pretty much taking the market into a bear market since Friday. We've run 2 gap downs, gap and goes. We've gotten the market to be oversold. The market internals did not want to go lower today. They started wanting to bounce, so we're bouncing them. We're squeezing out the pre-market trend that was all short this morning. We're bringing the VIX down. And if the market plays nice over the next couple days, we very well send the VIX back into a downtrend and then continue the bounce on the market. That would be ideal. Now, if you're someone who's bearish the market and wants the market to keep going down, then you want the market to come down to this 30-minute 50 SMA and hold. Maybe it goes a little bit below and then it holds, but ultimately you don't want a successful breakdown. Again, there's always 2 sides of the coin. So the 2 sides of the coin here is if we're going to continue the long in the market through the week, I am looking for the market to break the VIX down. And I use the VIX downtrend to buy and long up the oversold market, even though it's still in a downtrend. And then the next thing would be we take the oversold market and go back and test the 50 SMA in the market. And if we don't want to go into an uptrend, then we have to remain macro bearish. So there's a lot to it, but ultimately that's pretty much it. You should look at the VIX next couple days and try to dictate in real time if it stays up or if it stays down. Again, if you're like, look at momentum, whatever you want to do, right? But that's pretty much it. And so we'll take you back to the last, here's the last downtrend. Ready? So take this. Down, hold, down, little breakdown, then back over, then back under, then back over, then dump, and then continuation, right? So visually, for me, right, that's what, not that it has to happen exactly that way, but it's just, say it was a picture perfect world, which is not, right? You would want that to happen below the 50 SMA here, and the market would fly up, right? Because we enter a downtrend. And if you look at the chart here, that's pretty much it. Look at back here, market enters uptrend, we go up, market comes down, tries to hold the uptrend on the VIX, and eventually fails it. VIX goes downtrend, market blows up. All right, so look at here. VIX goes into an uptrend, past couple days is kind of choppy, whatever, market comes down. Market is oversold now. We're bouncing the market up. As a result, we've taken the VIX down. And if the VIX then can't hold support, say it tries to, and then it goes down, breaks down, then we're going to blast the market up again using the VIX. And then that's going to put us at a level where we'll have to decide based off the S&P. All right, so if we blow the market up like that, what's going to end up happening is you're going to take where? You'll end up getting, the SPY back up to like the 50 SMA potentially, right? And then it's no longer the VIX. Then it's like, well, okay, now we got to look, does the market want to go into an uptrend or does it want to stay into a downtrend? So from this point where the X is at, you're macro bearish. All right? You're macro bearish, and what you have right here on the bottom is an oversold bounce. If the oversold bounce continues, we're going to see that VIX break down. That breakdown will then give us a little more confidence in the middle of this oversold bounce to further it. Instead of it being like, oh, is it done bouncing and is it going to go down now? If we get that VIX downtrend catalyst in the middle of the bounce, then we'll continue the bounce, right? So we're using that VIX as a potential catalyst to say in real time, no, the bounce wants to keep going. It's not going to just bounce and then fail, right? There's another catalyst here. It's the VIX going into a downtrend. So that's how you can use the VIX for oversold bounces to go, I think there's still a ways for this bounce to go because the volatility index is signaling to me that it is in a downtrend. It wants to go down. The knowing that in real time can always be a little tricky, and the market sometimes plays nice and sometimes doesn't. But it's just the way the game goes, and it's just how it is. And so let's say that the VIX does break down and it's all kind of continuous. So we have the oversold bounce. Say the VIX goes to that 30-minute, and instead of breaking down right away, it does one of those kind of little bounces, kind of holds, and then what? Then we'll probably see the market kind of chill out, and then maybe do one of these. Maybe it pulls back a little bit, right? Because the VIX isn't just ready to break down right away and keep going. So maybe it does like a 1 or 2 day kind of flirt there, and then the market kind of pauses. And then the VIX does break down, and then we further the bounce, right? And then we take it back to where? Where then the market has to decide, does it want to remain bearish below its 50 SMA, or does it want to remain, or does it want to go bullish? Just like we're doing on the VIX. Right now, the VIX is going to get its opportunity here in like a day. Does it want to go bearish, or does it want to stay bullish? And if it wants to go bearish, then it's going to create the same scenario on the market, where the market then has to go. Does it want to go bearish, or does it want to go bullish? So right now we're using the VIX to kind of determine the continuation of this bounce or not. Then after that, we're then going to move to the SPY or QQQ or SPX or whatever, and we're going to be looking at that to then determine, does it want to stay bearish or does it want to go bullish, right? So we're going to do the same exact thing we're doing with the VIX right now in like a day or two with the market, probably, if we break down the VIX. If the VIX bounces, it doesn't go into a downtrend, then everyone buying this little low bounce is, not that they're going to get stopped out, but, it's just not going to just straight, reverse from. It's not going to be a full-blown reversal, right? And, it's not easy by any means, but that's really how that's how I would say I think the story is read, and you can read the story and the timeline a little better. I would say you just kind of have to have things that, and again, this does not make me a perfect trader by any means, but I would say I'm these days no longer really confused about why the markets kind of do what they do and where they're going and why they would go here. So there isn't too many days now where you're kind of thrown off guard. You can generally kind of get a vibe for why things are doing what they're doing, and it just becomes a little less confusing. And you start to really read the stock market and applied volatility, and so it becomes more fun, I think, because you have reasons why things are happening. You can kind of read the story. You can build a narrative for yourself. And so I think it's fun in that regard. And so I hope that helps. That's my big spiel. There's more to it than that. So yeah, I hope you guys tune in and you're just kind of hanging out and you're enjoying, what you're learning and what you're seeing. And hopefully it's just kind of helping you guys develop, looking at the timeline, the storyline for yourself, and hopefully it gives you some extra edge. And I hope it's not too daunting, right? So yeah, that's pretty much just that. Really, the title of my video, the title and the picture of my video really should be like, I don't know, Pepe pumping us back up, but so let's see, I was gonna say, this is probably our next target too, like right about here. Like this would be one of the targets I would also look for, like right here. That would be one. Right about there. We'll pop this into a 5-minute. And then let's see. it's kind of, I would say they're not necessarily goofy setup, but then this would also be another target. So like obviously if you think full reversal, like this is where I would be like these would be targets I would look on the upside like next. You know, but anyways, so that would be there, that would be there, and then it would be obviously back up to the 50 SMA. So this is like, you know, VIX goes into a downtrend, market does a full-on reversal. And when I say full-on reversal, it's not even true. It's really just a reversal back to test bearish trends, right? So these are all these targets that you see. These are all, I call them supply, right? You know, it's supply on the way up, potential supply levels, right? And if the market does not find, you know, enough supply to roll it down, then what does it do? It goes up, right? So these are all potential supply spots that the market could catch supply, right? And still stay in a downtrend, meaning you can reverse the market all the way to here, and the market's still actually in a bear market, right? And these are just potential supply locations, hence targets, right? So you're going and trying to knock out those. So on and so forth. Yeah, so here's that. And yeah. I gotta take, my chart will get like super crazy if I don't just take these off and then re-add them when need be and just leave those. Yeah, I mean, there's even downside targets too, and that would just be basically taking today's current demand run and then trying to, you know, flip that down to a higher low, right? So, you know, could even see like, I mean, I know it's like you could, but yeah, I mean, something in the back of my mind is like, you know, run it up to target, get a little resistance, pull it back here to make a 30-minute higher low. So for those that control the market, if you want to do that, that'd be pretty sick. And if we do it like that, then we do something like this. Whoa, hello. Go down to a 15-minute. 15. I have to double check some things first. Let's see. 5. Yeah. It's decent. It's decent. Yeah. Might not be ready yet, but we'll see. Something like that. And these are all going to change and update, but it's like you don't really have like a big higher low off this run. It's kind of just been continuous. So at some point, it's like either market just goes straight reverse, or eventually it's going to get some resistance and then, you know, chill out and build a higher low. So it's like we don't really have any higher low development there, even really on the 5-minute much, or 15 minute, 30 minute, things like that. So at some point you kind of assume that's going to happen. So yeah. And then you would look to build a higher low and so on and so forth. Also, something else to look at too is, or not look at, but really just think about, right? You know, something like this, like, you know, if you're thinking to yourself, you're like, are we going to go down to the 50 SMA? It's like, look at the slope. A lot of times when the slope is, you know, slanted down, it's like the market wants to, it's sloping away. Kind of like you saw here on the other day. You see how the market in the 50 SMA was sloped down? So even when you broke through and pushed away, you still went for the back test, right? And then look at it, back test, bounced away, and then still came back down, right? So that's another thing too, is to kind of pay attention to slope, and so on and so forth, you know. Another thing too is like when you think about this, right? When you're like, well, why didn't, you know, maybe it didn't break down here, right? Look at the slope, right? So the slope of the SMA is really slanted up. So you kind of came in, bounced, tried to break away from a sloping SMA, bounced once more, then eventually like, all right, we're done for. And then, you know, so that was like 3 attempts, 1, 2, 3 down, right? Looks like Bitcoin's going to sell down to 80,000. I mean, it could easily at some point. it's not below levels for me yet to go to 80,000. So as you can see, I already have it all mapped off, right? So these are all my, like I said, it's not the most straightforward kind of like moment for Bitcoin as far as like, you know, levels that I mean, it's all straightforward, but it's just a lot of them, right? So I have all these targets mapped off. This guy, this guy, this guy, this guy, this guy. I have nothing from here to here, so it's kind of the panic zone. Not really, it's just what I call it. It's probably wrong when I say it like that, but ultimately, like, this is our target down in the market to find support at any one of these demand areas, kind of in between it right now, right? And only if we were really to get acceptance below this low target would we then see this big kind of shelf drop into the next zone, which is as low as 80,000 right now. So that's as low as I have Bitcoin for the moment, because I think the market, again, things don't move in straight lines generally. So as you come into the targets, you're generally going to bounce. As you come into targets, you're generally going to bounce. So right now, we've just ultimately just came into some really nice target lows, right? So short targets are long spots. So we just sold the Bitcoin market down to sell targets. Now we're going to bounce it. That's generally what happens. Yeah, and so even, I was going to say, even my targets for this bounce on right now, even though I don't have one on there, you can see it's there. You can see my VWAPs are chasing the price down. So I'm taking this last leg right here. So this whole last leg hasn't really had a big retrace. So I figure once we bounce, we're going to take the market and we're going to generally ram them back to that level. There's actually one in between that I'm not really looking at, but I kind of am, which is right there, which we just hit. So if we take the leg and the previous leg and we're, you know, extrapolate at least this 4 hour, it would be right there and it would be right there. I know the price is right there right now, so they're, oh yeah. But again, this is the same stuff I do every single day. It doesn't really change much. But if you look at, you know, this market and you take this leg and you take this fake bounce and you take this leg down and you extrapolate the trend of it, it would be here and here, those two bullseyes. So what did we do? We, over this last day or whatever, sold down into sell side, buy side, whatever you want to call it. Sell targets are long entry. We eventually bounce, and then we go and attack the short-term volume trend of the previous market. So this sell move, we'll call that a market. So this sell leg was a selling market. That selling market eventually got us to some demand. And now we're bouncing and we're going and screwing with the previous market right there. That's all it is. Just screwing with the previous participants that shorted this last move in Bitcoin. So the sell move was very successful. It was a very successful sell move all the way down to targets. Those that, you know, in the very micro environment hold their shorts too long are going to get screwed with right there. That guy's pissed, right? Whoever got stopped out there is mad. You know someone stopped out that was short. So that's kind of the objective there. Oh yeah, well, I mean, that's some short-term stuff, but there's more to it than that, obviously. There's always more. There's always more. But yeah, so that's that. I actually got to check a message real quick. Monday, Tuesday. Alright, sorry about that. Sorry about that. Even though I still have another message to read. Okay. Beyond technicals, BlackRock is selling. Personally, I'm not panicked. This is clearly a shakeout. Yeah, so I mean I look at the whole, so if you guys ever are on Twitter and you're, like for example, Cooks, you're saying BlackRock is selling, which like they are. So this is just my take on it. So for me, I see a lot of the Twitter posts, particularly what I call the selected Twitter accounts. So the selected Twitter profiles on crypto. You'll hear a lot of like, "Oh, BlackRock just bought 590 million today, and you're panicking, or you're selling, or Larry Fink, this man just bought another however much, right?" So as of recent, there's been a little bit of selling there. Um, so again, BlackRock is buying Bitcoin on behalf of their clients who have then invested in their publicly traded ETF. So you'll see a lot of high profile Twitter accounts, what I call high profile, just basically media attention accounts, selected ones, talking about Bitcoin and, like Larry Fink and BlackRock are buying Bitcoin, right? So they're buying Bitcoin because their ETF that's publicly traded, people aren't investing in it. And after people invest money into their ETF, they have to then go and buy it. So, yes, it's them buying it, but it's not really them buying it, right? It's not like you buying Bitcoin because you want to own Bitcoin and you want to invest in Bitcoin. It's more like I told you I want to buy Bitcoin, so you have to then go buy it because I told you to buy it, right? So, in theory, their Bitcoin ETF and the inflows and the amount of Bitcoin that BlackRock or any brokerage for that matter, or any investment company, or I don't really call it investment company, BlackRock, Fidelity, etc., any custodian going out and buying crypto on behalf of the inflows from their clients for their publicly traded products like ETFs can come from a variety of places, ranging from retail to hedge fund, etc. So when we see on Twitter that BlackRock is buying, coming from many high-profile media attention accounts, it's pretty much just, it's its information isn't fully accurate because it's not Larry Fink buying it for himself and it's not BlackRock buying it for himself. And then when you see some of the outflows that are happening in Bitcoin, it's not BlackRock selling it, it's you. Whoever bought their ETF and decided, I'm good, I'm going to sell, and now they're selling the ETF, they now have to sell the Bitcoin to rebalance it, right? Now, we can get in, some people are going to say, well, there's IOUs. They're buying the Bitcoin with your money, and now they have the Bitcoin, and they're just giving you your money back and issuing your pay. And that's the whole gold, JP Morgan rigging the gold market. That's a discussion to be had, but it's outside the whole, concept of just, if you buy their ETF, it's retail. It's retail buying Bitcoin. It's retail selling Bitcoin through BlackRock, right? So when you read those things, be very, very skeptical, and don't let it manipulate your thought of how this is actually working, right? You can go read a post and it says, again, BlackRock's buying Bitcoin. No. I mean, yes, but no. It's on behalf of retail that isn't buying Bitcoin directly themselves. They're just using BlackRock as a custodian third party / for their ETF. So all of the outflows that we've seen recently, it's not the big guy selling, most likely. It's who is it? Most likely retail who bought the ETF too late or cashing in or whatever, right? So that's the way I still see this drop. Is it's really just some weak hands that have bought some of these ETFs and they're just getting shooken right now. And so that's the way I see this drop. I don't think it's big guys, Larry Fink, BlackRock saying, I'm selling Bitcoin because I don't like it. I think it's just them saying, well, the retail people that bought our ETF are selling, and now we're going to have to rebalance this ETF to obviously appropriately, balance it via their selling. So that's really what is going on there. So I'm assuming you probably knew that and know that, but yeah. Yeah. Exactly. So this is and so it's like, are they really selling the Bitcoin, or are they just issuing you money back, keeping the Bitcoin? I don't know, right? That's not something I'm gonna dig into. Honestly, I could care less, because even if it was the case, nothing's gonna happen. I don't even want to go there. Like I said, I could care less. I'm gonna wake up tomorrow. The Earth's still gonna be spinning. Grass is still gonna be green. Food's still gonna taste good. You know. I'll still lose another 400 subscribers a month. Things ain't changing, baby, and I'm happy, right? So, if they're issuing IOUs, so be it. There'll be somebody else out there to figure it out, and whatever. So yeah, that's what's going on with their old friend Bitcoin. Which, anyways, you can see it's gone up and it's got these targets. And again, that's primarily because you guys are probably on the stream smashing the buy button, and I don't blame you because again, our targets don't miss very often. So you probably should do that. Actually, you shouldn't do that. That's a bad idea. Don't do that. Let's go take a look at the SPY. What are you doing? Not quite to that target, and that's okay. Speaking of, let's take a look at this daily too, because again, if we're going to reverse the daily scale too, I mean, we're going to have targets all the way back to like, oh shoot. I'm just kind of, I mean, I would have to take a deeper dive at this stuff too, but yeah, I mean, we even have daily targets back up to like, so these are pretty much our daily targets when the market's ready. So like when we start bouncing, we're going to be targeting up to here next, something like that. And there could be some other levels that I'm missing for the moment, but it would be there. And then we would even have to take this green guy here, and then we're going to do this one. So these would be like a couple daily zones that I would watch, really. Sometimes the chart makes more sense. Sometimes it's not as always straightforward. But these would be basically the daily zones that I would watch for targets back up now. And it's simply just, right, so you take this last market move, right? It rolls down. And then it bounces, and then we just go target all the daily volume, right? So how we just rolled the market bearish, so again, we just bounce it, then we just roll it, and then we're just going to bounce it. And then these could arguably be potential daily chart lower highs, right? You're just taking the previous sell leg, figuring out where the potential next lower high could be, bouncing it to there, and then rolling it. Which is also another way of saying it is take everyone that's participated the past couple days bearish, squeeze them out to where they would be pissed off, and then maybe we'll lower high it again, right? Or maybe we don't. Maybe we fail the lower highs, and then it does that. And then we'll be on a higher low concept, right? But right now, from this top here, down, lower high, down, bounce to where we can do another lower high, and if not, then we can transition to maybe a higher low. Yeah, something like that. So also this is what this is what I was talking about before when I talk about like selected accounts, mainstream media accounts. So like check this, right? So 2 hours ago, this guy, big following, 134K, big following. Tether just bought 700 million worth of Bitcoin. They now hold 7.7 billion Bitcoin. Like, all right, cool. We'll go over to Ash Crypto. Breaking, Tether just bought $705 million of Bitcoin. So a lot of originality there. Crypto Rover, what about him? Is this one in there? No, he didn't follow that one. Or maybe he did. Nope, not quite. So again, you'll see a lot of those same, it's just a regurgitation of information, right? So ideally, right, you'll take one of these big old Twitter accounts and they're going to say something like, I don't know, Larry, right here, breaking, MicroStrategy buys another whatever Bitcoin, right? And go over to here and it's probably going to say the same thing. Oh, breaking, Micro were just bought, so. they basically kind of do like a circle jerk regurgitation of information on the internet. And so when we say like the Larry Fink thing and BlackRock buys Bitcoin, I mean like one of these accounts say BlackRock buys Bitcoin, even though it's kind of inaccurate, and then send it out to, and then another one, and another one, and the next thing that was, got to 69,000 people, so on and so forth, or like, here you get, tons of people could be looking at this at any given moment, and then, they're thinking BlackRock bought Bitcoin when in reality it was just retail, right? So, gotta be careful too when it comes to the internet, and, not everything's going to be always correct and so on and so forth. But it's just kind of weird how that happens on Twitter. It's like you can get a couple of those big main accounts, and it's just basically like, again, a circle jerk of the same information. So yeah, it's interesting to me. Yeah, Oliver, yeah, I've watched some of the stuff. I definitely would agree with a lot of stuff I've seen from him. So do ETFs follow Bitcoin true to Bitcoin price, or select based on retail? I would say the ETFs follow Bitcoin's price fairly well. Yeah, I would say that's the case. I actually haven't looked at MSTR in a while. The craziest, I would say the best part about MSTR is we pretty much called the resistance top a day before it happened, and then since then it's just been getting shit on. That being said, I did think we would squeeze them with Bitcoin going higher, but it hasn't happened. So obviously that's shorts of one for now. But yeah, that was the +3, +4 standard deviation top right there. Day before it happened, pretty much notified entire Twitter base there. So that was good. That was one of the better kind of top calls I've had in a while. It was right and wrong because I was like, yeah, it's probably going to go down, but at the same time, I think it's still going to get squeezed out because of Bitcoin going higher. And so that's been wrong. The top call was right. The secondary part was wrong, which was continuation higher and squeeze, one more squeeze. But yeah, or like GBTC. GBTC follows the price action pretty well. Bitcoin price action pretty well, that is. Does anybody know? Let's see. Market's still doing pretty well. That's good. That's always a good sign. Yeah, I will say there's I mean, obviously there's misinformation everywhere. But yeah, I mean, obviously it exists on Twitter pretty big too. And one of the ones that, like I said, like I try to, I wouldn't say I try to double check everything, but one I did one the other day. It was Jim Cramer. I can't remember. It was one of the big like finance pages. Was like something about, I think it was something about Bitcoin and Jim Cramer. I could be wrong though, but I think it was Bitcoin. Anyways, so he's saying something about Bitcoin, and it's Jim Cramer. He's like, yeah, Jim Cramer says this about Bitcoin. I'm like, did he though? Like, did he actually say that? And so I took the date and the time of the tweet picture shared by this, popular finance account saying he said something about Bitcoin. Then I went to Jim Cramer's Twitter account and I scrolled down to that page or that day and that time, and it was non-existent. So unless he deleted it, that's how quickly someone could make a false tweet of Jim Cramer, inverse Cramer, and then make it go popular, and then, how many people see that, hundreds of thousands of people. Now they're like, oh, Jim Cramer said Bitcoin was a buy, so now they're going to sell. And the reality is it didn't take 3 seconds to go scroll Jim Cramer's timeline to figure out it never actually existed. RKLB. Where is... It's trading +2 on the yearly. It's trading +4 right now on weekly. That's kind of interesting. That's usually not the most common scenario. Rocket Lab USA. What do these guys do? Satellite. Yeah, but anyways, this is trading at +4, so generally that's a good profit take spot. Now again, there will be times when you don't have resistance around +4 and stocks can keep going higher. So I always kind of feel bad when that happens, but I would say like generally, it tends to be like, for example, right? MSTR. We'll just take this. We'll take this for an example, right? The last time, look at this. So MSTR, when it got to the +3, +4 weekly, it just dumped out 30% instantly the next day. So the same thing I'm saying with RKLB was the same thing that I did with MSTR a couple weeks back. I'm like, hey guys, MSTR got to +3, +4. Generally a good top. Generally you see some selling here. How much? I don't know. Does it extend for forever? I don't know. Could it go higher? Yes. But historically, a lot of times when we get into this area, it's a suggestion that the market has run enough and you could very well be towards some resistance, right? That being said, the flip side of the coin is when +3, +4 doesn't hold resistance, like, yeah, it can actually be like a pretty decent break spot, because everybody that thought it was resistance and maybe shorted gets squeezed out, and generally, it's like the underlying fundamentals of the company have to truly support the move. So that's what you would have to do. +3, +4 tops work really well when the underlying fundamentals of the company don't truly support what has just taken place and it truly is hype. If it's truly hype and euphoria that's been driving it without true underlying fundamentals that support the move, the market almost always gets destroyed around +3, +4, because you've statistically gotten to a very overbought location, and if the fundamentals don't support the statistically overbought run, then it gets whacked. If the fundamentals are legit and do support the move, then those that think that it's a top get blown out, right? And then the company becomes more established, and then the trends develop higher, and things can, so there's plenty of times where +3, +4 doesn't hold a crazy top. It maybe just consolidates and moves higher, or continues to move higher. And so if you continue to move higher on RKLB at this point, the way I would say it is, it's either there's so much euphoria that it just kind of continues the euphoric move a little bit more, which we've seen, or again, it tops out, pulls back, or the other, because it's not, the fundamentals don't support, or the way the patterns usually come would be like it just tops out, sells off, tops out a little bit, consolidates for a move higher, because there is some truly fundamentally changing aspects about the business that are going to further its growth. And so it's the market's looking forward and being right, and so on and so forth. And that's pretty much that. Yeah, so this is for sure not where I would look at something and be like, yeah, we should be buying this long, right? I would just, no, it would be the opposite. I'd be like, you should probably be looking kind of more on the bear side. And when I say you should be looking more on the bear side, that would be when the market first comes into it. So when did you first come into the +3, +4? Let's see, 1 second. Let me map them both off on the weekly. When you're weak, or wait, I must have had that chart wrong. I think I was on the wrong chart, because now it's not +3, +4. So something's, I don't know what I was doing. Maybe I was looking at the 3 year. So that's, see, like I was saying earlier, like usually, but anyway, so right now you're only at +2 daily. In the 1 year weekly still isn't. So the +3, +4 weekly would be all the way up here. So it's overbought, but it's not crazy overbought. Sorry, I made a mistake there. When I went to click 1 year week, I actually clicked the 3 year. And even before I clicked that, I'm like, that's weird, because usually you're not at a +3, +4 weekly unless the daily is. And the daily was at +2, so I was like, that's weird. But so that was my mistake. I apologize. But all of the same stuff I said still applies. You're just not as overbought as I thought you were. But look at here. All right, so you've come into the +2 daily, right? So again, it's like you've come into some slightly overbought, little pulling back. But yeah, if you get up into like the +3s, +4s, you'd be far more euphoric, and it'd be far better to look for like a little bit of a pullback in top and stuff like that. So you said the VIX is falling below the 50 SMA. Let me just bring it up real quick. I mean, I could kind of assume that in the back of my head. Just kind of how we've moved a bit. So right now we're not. No, we're not. We're not below the 50. Right? Yeah, no, we're not. So right now the VIX is still over the 50 SMA. So that sort of catalyst we talked about is not yet in effect. Right? And I really don't expect the VIX to break down the 50 SMA right here and then just keep selling off. I really don't expect that. It could totally happen. We'll see. I don't expect it. I would actually expect that there's going to be some sort of hesitation around here. And it's not just a straight clear-cut drop and breakthrough. Am I right? Who knows? Am I wrong? Probably. But yeah, so that's kind of what I'm seeing there with that. But I think the SPY just got that 30-minute target. Yeah, so there you go. There's your 30-minute target on SPY. So what time is it? It's 12:52. I would say give this thing about 8 minutes, because there could be some resistance here. So I would not be long bias starting here. I would actually be looking at like short scalps here, because that's it. And you know, that's that. So I'd actually be looking more on like the scalp side here to potentially a 30-minute pullback, coming into the next 30-minute candle or the one after that. If in 8 minutes the thing's still holding up, or 20 minutes the thing's still holding up, then that whole concept will be off the table. But generally speaking, as you come into that target for the first time, which we just did, so we'll just, again, this is the target where we're at on the 30-minute for now, right? So this is the zone, like this would be the target zone, right? So as you come into here, and actually I should maybe look at this again, but this would be your 30-minute target. So your first attempt in, you're already getting your resistance. And in 8 minutes, we get a new 30-minute candle. So this would be a 30-minute target. And if the 30-minute target is going to hold a little bit of a top and resistance, many times it will be as we transition to the next 30-minute candle or couple of. So, and it's not it's not a perfect system, but you know, yeah, we got a little bit of a resistance thing here, but if this is going to have good resistance, and like actually pull back somewhat harder, then it's a lot of times it will come as we transition the time into like the next 30-minute. And then, you know, something else to think about is like, you see where the 10 SMA is at? So if we look here, the 10 SMA is all the way down at 589.98. So, you know, like if the move over the 10 SMA were false, right? Let's say this isn't like a legit 10 SMA breakout, right? And it's kind of false. Then you would assume there's a back test of it. So that's at 598.96. So if we hold good 30-minute resistance here, 598.96, then, you know, you kind of expect we're going to pull back down to what did I just say? 598.96 or 598.97. 598.97, right about here. Wait. Am I dumb? I'm dumb. 589.90. I'm like, something's just not right here. 589.90, right about there. So if we even do like a little 30-minute resistance to 10 SMA back test, it would be like down to there. Now, again, there's your resistance. Cool. Thank you to those that control the market and make our stream and me look smarter than I really am. I appreciate it. And again, if we do that, right, you can kind of see how the pattern's going to look, right? Kind of like you can already kind of build an idea for that. But anyways, I mean, and that's an SMA target. I usually go for volume targets too. So like, but anyways, so there's some good resistance. We still have 5 minutes till the next 30-minute candle. So again, it's not like you've just sealed the deal on a mega short. No, like that's the first attempt. Good short move. Good kind of a good momentum short scalping, right? Now, if the chart were really going to top out and really change, again, we would still need to kind of expect that maybe into the next 30-minute candle. But anyways, so good stuff. That's good. All gravy. Now, yeah. Oh, also, by the way, so see what just happened with the VIX? You see how it all kind of lines up? You see how we went and got that 30-minute target, and at about the same time, you can see how the VIX sold all the way down to the 50 SMA. So now the VIX is at the over-under support, bullish, bearish level. And how I'm like, I don't think we're going to break the VIX down right away. I just don't think it's going to do that. I think it's more likely that we'll kind of have like a bounce and start to hesitate here. So you can see how we're kind of timing that VIX 50 SMA support up with a 30-minute potential resistance top, right? And then we used a short-term 10 SMA here as a potential target down. As in, hey, maybe the 10 SMA break is false. Back test 10 SMA. VIX, 50 SMA support. SPY, 30-minute volume trend resistance target. See how we're lining all those things up in the real time? Bing, bang, boom. All right, so now with a true 30-minute kind of reverse low, we could, again, arguably be looking at a target. Now, it would be sick if this happens, but, you know, we'll see how this develops. It's no guarantee, obviously. I hate saying guarantees, but, you know. But, yeah, right now, I mean, you know, we're going to be looking for like, well, I should even, let's check this guy here real quick. Yeah, I mean, that's the 10 SMA target. We'll see what they do with it, but so that'd be one of the first shorter term targets I could arguably look at. There was that 10 SMA one, and now if this thing really extends, because again we're still in a bear market. Don't forget that the market's still a bear market even with this bounce, right? We're just going back up, like I said, and attacking supply levels, and any one of the supply levels has an opportunity to still hold resistance. Because again, this is an oversold bounce in a bear market. So we're buying up the market back to supply, all right? And all of the volume and everything that got long off today's bottom has arguably demand right here. So the same way that we're looking at the supply side targets is the same way we would look at this. These would all be, you know, arguable targets on the downside. Just when the market's ready, when it wants, and I'm not saying we're going there right now, blah, 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 blah. It's just the concept being, you know, look at this could rally all the way up, eventually top out, and then pull back, and then you go to higher low, right? And then, like, you know, I can already tell you probably what's it's already probably happened, and if not, then I'll show you what's going to happen. We're probably just going to the top down 1 minute for the moment. So everyone that just sold that last move short at resistance, we're going to squeeze them back up to their volume weighted average price, which I would pick as like that zone right there. So this is everyone who just shorted that last move. Anyone that was too late, we just screwed them over again. That was all. You know, and again, like I said, there's still 1 minute until the next 30-minute candle, right? So when you think about, like I said, if this was going to be like kind of like a be-all, end-all top for the moment, you still have a couple minutes to wait till the next 30-minute candle. This is just first attempt resistance, so on and so forth. Excuse me. All right, take a little peeky here. So what have we done? We've ultimately just hit some 30-minute resistance, pulled the market back, down to 10 SMA trend. We've held trend, blah, 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 blah. Here's your new 30-minute candle. That's all. And your 30-minute candle, if we're going to really hold a resistance top, this is where it would need to start happening. Or into like the next 30-minute candle. So this next 30 minutes to hour will be important in determining whether or not the market's going to hold continuation of the sell move down here. So, and the only way that's going to happen is if the market internals start going bearish too, and if the VIX starts to bounce and so on and so forth. So, if we look at the market internals, again, we topped some here. We topped a little bit there, a little toppy day. So, those would have to continue bearish. So you can see how we've pulled them back, we've bounced them, we're starting to put in little red candles on them, hence why you're starting to see that kind of little bit of a lower high there on the market. See how we've bounced it, we're kind of lower highing it. And that's arguably because the underlying issues of the market are doing the same thing, all right? You can see that there. And that might not look super clear to you guys, I know it's kind of small, but yeah. Again, you can see how we're bouncing the VIX. We brought the VIX into 50 SMA support. That's weird. Why is it? Oh, I see why. So again, we kind of brought it down to the 50 SMA. It's still holding. So as long as that VIX is not breaking down, remember we said to continue the long, the VIX is going to have to give up, right? And it's not fully given up. And it's not entirely true. The market could keep going up without the VIX breaking down. It's just it would be easier for the market to keep going up with the VIX breaking down. So, real quick, do you guys enjoy the stream? Do you enjoy the targets? Do you enjoy the narratives, the bias, everything? Do you enjoy it? Does it make sense? Take that off. Don't really need that. Hey, a little heart. Must mean a yes. What time is it? Oh, snap. 1:02. I don't have to go right away, but I kind of do. I'm showing one of our properties today for some tenants. That's at 2. So I'm going to have to get ready to go here fairly soon. Oh, Bitcoin. Good old Bitcoin. But yeah, we'll probably end it there for the day. As I said before, you know, a little bit of 30-minute resistance there, no big a deal. But yeah, I'll catch you guys back, tomorrow for a little bit. Probably do a little quick stream tomorrow after our private group, which, by the way, if any of you want to join, feel free. Link is in the description, and we have a coupon code that's going to be valid until the end of New Year's. So if basically any of you guys want to spend money with us, there's a coupon code. Coupon code Xmas 2024. You can use that pretty much through the New Year day. I'll probably leave it open. So copy it, paste it into the checkout page if you want. We do the same stuff on stream. We have 2 streams. There's one that I do, which is pretty much the same thing you see here. There's a little less talking because then I want to talk over Brandon sometimes. So if you do join the stream, use the coupon code, get you a little more than 30% off on any of the stuff. And this is pretty much what you'll see every day. There'll be a little less talking because there's 2 people on stream. It'll be a little quieter at times, but it's pretty much just this visualization, some drawings, levels, pretty much no different than what we do here at this point, just a little less talking. So yeah, everyone take care, have a great rest of your day. Yeah, Be Custom, you should watch some of the streams from time to time. We've gotten pretty exceptional at predicting the market. I don't know if it's just luck, maybe I'm just getting better after doing it for so long, or who knows, right? But yeah, we've done some pretty cool stuff as of late. So anyways, cheers. Hope you're doing okay, guys. And I will catch you back on the next stream, which will be tomorrow for maybe another hour or so. And then, again, New Year's Day will be off and what have you. So cheers, and hope everyone has a good New Year's Eve and New Year's Eve day or what have you. And I'll see you in the next one.